A warm welcome to our guests tuning in. Hope you had a good long weekend. We're live from our moomoo Singapore office for yet another live webinar show. I'm your host, Olivia Higgins. Now, while we wait for a few more people to join in, here's a video crafted and curated just for you. Enjoy. Welcome back, everyone, especially to the people who just joined us. Once again, you're on another live show. I'm your host, Olivia Higgins. Now, I'd like to remind you at this juncture that it's really about education today. We're learning together, we're helping each other on our personal finance journey. So really use this chance as a place to network and also learn educational tools and how you can apply the insights from our experts today. Okay, and remember to ask your questions because it's all about a two-way conversation on shows like this. We want to create that bridge for you to gain access to the experts and to learn as much as you can from today. So as we proceed on to the second half of the year, we're constantly looking for new potential opportunities. Looking for ways to diversify and also reframe our portfolios. So today's topic, tech on to a sea of opportunities. Now, what does this exactly mean? We will learn how you can invest in the future of Southeast Asia's tech companies. And we're also looking at emerging markets as of now. There is so much talk about uncertain markets. So I think today is really about trying to see what other strategies and tools are out there so that you can use it in your current portfolios. Okay. As we mentioned before, we want you to continue to invest and grow your portfolio for 2023. So learn as much as you can, and we'll have a live Q&A at the end for you to ask your questions for our experts. I'll pick the top ones that I believe will be the most relevant to today's topic. Today with me, let's welcome from CSOP Asset Management, Raphael Go from Intermediary Sales. From SGX Group, we have Associate Director of SGX Indices, Andrea Ip. And from moomoo Singapore, equity dealer Juncheong too. Hi, everyone.
Hi, Olivia. Thanks for having us.
Glad to have you back on the show. Now, maybe just for the audience that doesn't know you, I know we've got some new faces, Andrea and Juncheong. Perhaps you can just give me a quick introduction of yourself and the objective of today's show. Raphael?
Yeah, so I think introduction of today's show will be just more on education perspective. I think we have something that is, I would say, a missing piece of the puzzle to most investors out there in the market today. This might just be something that you are looking out for. So just stay tuned and we'll share with you shortly.
Andrea?
Thanks for having me. Now, I'm Andrea. I look after SGX Indices focused in Asia. So, SGX Indices is a part of SGX Group, and we are a global index provider with presence in the ETFs and structured product space. Now, what we aim to do today is really a two-way discussion on how indices can help you in expressing your views in a certain trend. In our case today, we're going to talk about the technology trend in Southeast Asia. So, stay tuned.
Perfect. And of course, Juncheong, it's your first time on a live webinar with us. Tell us about yourself and also what you'll be sharing today.
Thank you for having me, Olivia. Hi, everyone. I'm Juncheong here, part of the dealing team with moomoo Singapore. Maybe I've spoken to you on the phone or you have received emails from me. Very nice to see you if you're in the audience today. I'll be sharing with you on our app demo towards the end of the show, so do stay tuned for that.
Perfect. Great introductions. Now we'll go straight into sharing the insights with Raphael and Andrea. We'll be back with you shortly, Juncheong, later on in the show. So let's dive straight in. First question I've got for you guys is, over the last decade for both US and China, we have seen substantial growth in their economies, right? So we've got uncertainty right now with the markets. So where can investors now look forward to in terms of the growth opportunities within the space, especially related to today's topic? We're looking at the emerging markets and the future of Southeast Asia's tech companies.
Yes, a very good question, Olivia. I think every investors out there are looking for some signs or looking for a space to invest in amidst all these uncertainties revolving around geopolitical tensions, as well as increasing deglobalization in today's context. So nonetheless, I think with all this in mind, definitely all of us have seen both US and China's progress over the last decade, and it is the growth over the last decade for these two countries. It has been unparalleled. I would say that you look at the broader tech companies, you look at the Chinese tech companies, they have seen substantial growth in that space. And with today's context on all of what's happening on the ground, and with all this deglobalization, definitely there will be a space out there for investors to keep an eye out for in retrospect to where can they actually invest in. And in fact, we pretty much prefer Southeast Asia as well as India itself. As we can see on slide 5, I don't think trends move without a reason. Trends definitely come with as a reason, and we see the increasing geopolitical tensions and the deglobalization. What do I mean by this is not really a deglobalization per se, but more so companies are actually taking the steps to de-risk their over-reliance on China in terms of their manufacturing perspective. So in retrospect to that, definitely it boils down to there's a demand for this manufacturing to be filled in this space as well. So where did all this demand go to? So it actually went over to Southeast Asia. So if you were to look at the chart map, it is no surprise that in 2014, there were only 2 unicorns back in the early days, because possibly it may not be seemingly a nice place to raise funds and to start their new venture out there. But however, in today's context, in 2021, we actually saw more than 46 unicorn startups in Southeast Asia alone. To name a few of these, you see, like for instance, Carousel, the likes of Ninja Van for delivery, as well as Secret Lab that does peripherals. So these are some of the key things that we've seen in terms of trends within the Southeast Asia region. So moving on to slide 6, as you can see, like I said earlier on, there's a lot of new initiatives and startup all these unicorns. But what we are seeing is that actually all the large cap companies such as with the likes of Tencent, Google, Intel, SoftBank, Alibaba, these are the few mega cap tech companies. As you can see, they are also investors of all these new startups and new unicorn companies within the region. So from this perspective wise, you can actually expect that if the global tech giants, they themselves are investing within the region, does this mean that they are also trying to put their leg into something that is new going forward? So this is also one thing for investors to consider. Next up, over on to slide 8. The global chain relocation, like I mentioned earlier on, in terms of diversifying or de-risking from the over-reliance of China and as a manufacturing hub. No doubt they will still use China as a part of their manufacturing hub, just that for certain components, they will be moving on to other parts of the world to facilitate on this manufacturing going forward. This is also a key reason that, as you can see, the ongoing geopolitical tensions as well as uncertainties within the region also allows you, as a business, you have to be a bit more you have to de-risk and you have to diversify in terms of your supply chain. You wouldn't want to consolidate and concentrate all of them in one space, which is why you can see for Apple's case, they have started to diversify out their manufacturing to India, as well as some productions of their earpiece products such as the Beats products to Vietnam. And for Samsung itself, they have already manufactured some of their phones in Indonesia and also started a new R&D facility in Vietnam as well. Over to slide 9. For this case, why we actually prefer Southeast Asia as a region. Actually, the numbers don't lie. So for foreign direct investments inflow hit a record high for ASEAN region, especially rose by 42% to $174 billion in 2021. So like I mentioned earlier on, trends, they don't appear out of nowhere. Definitely, there is a reason behind all this, and it is also a reason why companies are shifting some of their, I would say, supply chains to de-risk. And also, you don't put all your eggs into a basket, right? Over to you, Olivia.
I think that's a really good point about not putting all your eggs in one basket. I think you highlighted a good contextual point there and also setting the stage for why this topic is so important today. So next question is, why then Southeast Asia plus tech?
So I think on this perspective wise, there are two main key reasons. Like I mentioned earlier on, the industrial chain relocation is one key factor that we should be focusing on. This encompasses the hard tech companies, whereas on the other hand, there is also the internet adoption segment where we have to look at the soft tech companies for growth. So over to slide 13. So the hard tech side of things, you see that with a favorable demographic, you have large working populations and favorable labor costs. So this is actually makes sense for business to relocate some of their manufacturing supply chain there. Whereas on the other hand, there's also favorable policies such as tax incentive side of things and the opening of foreign ownership within local firms. I think this is also one key reason. Traditionally, over the last decades or so, you will have seen that or we have heard that companies would not have foreign ownerships within the not just ASEAN region, perhaps even in India's case as well. So likelihood there will be a requirement for the domestic side of things or the domestic company to own at least 51% of the shares of the company. And going forward with favorable policies, tax incentive, and the opening of foreign ownership of local firms, this will allow a more favorable environment for companies to relocate their manufacturing, some of the supply chains there. Next up, what I would like to share on is a bit more on slide 13. So like I've mentioned earlier on, the favorable demographic side of things, where we look at the Southeast Asia and India perspective, you get a really young workforce compared to China. And on top of that, I think on this spectrum, everyone is always looking about, for business manufacturing case, you're always looking about cost. What is your fixed cost? What's your variable cost of materials and all? As of right now, the labor charges for Southeast Asia and India is seemingly favorable for manufacturers out there. So this is what we see and why we prefer Southeast Asia as a focus for tech companies to shift some of their productions over. So next up would be slide 15. I just want to highlight some of the key industrial transfer when we see such industrial chain relocation. I think industrial chain relocation is not something new. Actually, in fact, since the 1800s, we have seen such a transfer. So firstly, it was from the western side of the earth. You have the UK transferring some of their industrial to the US, and you saw wealth creation within the US. And then the second transfer was from the US to Japan, where we saw wealth created in Japan as well. And then from Japan, then you move on to your four Asian tigers, your Singapore, Hong Kong, South Korea, as well as Taiwan. And South Korea and Taiwan, these days, they are actually manufacturing hubs of these semiconductor chips in today's context. And you can see there's also wealth being created in that aspect as well. So next up would be these four Asian tigers transited some of their manufacturing to China because of possibly lower labor costs, as well as with the labor manpower, and they have the capacity to scale. So I think that was also one of the key reasons. And we saw how China took this in stride, and over the last decade, the growth was really unparalleled. And what we are seeing right now in today's context with these ongoing geopolitical tensions and also all these uncertainties with regards to deglobalization or decoupling, if one will, or also de-risking for businesses, we actually see that this will bring about wealth transfer to Southeast Asia and India as well. So in respect to this, moving on to slide 18. Like I mentioned earlier on, the growing middle class side of things with the wealth expansion or wealth growth within this region will boost about a few things. First of all, the tech adoption rate will be one of the key factors that people will tend to be spending on. If you have higher disposable income, you'll be able to buy more tech equipment. You also want to spend most of our money. Maybe you are able to spend through food delivery, online shopping. These are some of the key factors. Even these days, you guys book most of your flights, your travel itinerary via online app or online booking space. So these are the key segments that we see that with a growing middle class, this tends to bring forth a lot of opportunities within this space. And moving to slide 22. The group adoption of, or rather the fast-growing internet sector will also bring about a lot of demands for various internet services. And these new internet services will bring about new startups and also for IT outsourcing. So in fact, fun fact out there, actually 50% of the Fortune 500 firms outsource their IT developments to India. So which is why we also want India to balance out in this perspective. Yep, over to you, Olivia.
Thanks for that. And also the sharing session on also the details of what we first talked about. Now, the next question, I'm already getting questions about this. So how can the CSOP IH Southeast Asia Plus Tech ETF then allow investors to accurately capture the growth space within this context?
Thanks, Olivia. So let me take this question as an ETF is an instrument or vehicle that tracks the index, and that is where the index itself, the index design itself, captures the relevance of identifying stocks that are relevant to a theme. So in particular, this index tracks the 30 largest and most liquid companies in number 1, Southeast Asia, and number 2, emerging Asia. And these companies are involved in the technology space. Now, it's a very comprehensive coverage on both the upstream and downstream activities of the tech sector, be it it's software and hardware or digital services. Now, when we identify the relevant subsectors in constructing the index, now we want to capture the large technology presence in Asia that is primarily of a fast-paced and agile nature. And this is also where we exclude industries that are infrastructure heavy. So you have your energy, you have your traditional telcos, and other industries that operate on a completely different consideration, such as healthcare. So we are tracking companies such as your manufacturers in electronics, cars, and semiconductors, as well as the beneficiaries of the tech sector, your software consultancy, electronics payment processors, and even movie production. So to take a step back, our objective in designing this index, it's in a nutshell to capture the technology trend in the region where there is global investment in both the supply and demand side with active raising of fundings for technology startups, as well as signs of accelerated growth in the region through the use of technology.
Thank you, Andrea, for that, especially highlighting the index methodology selection criteria. I think that's also really important. Would you like to extend on that? And also this extended question is, how then does it stay relevant to the current uncertain times?
Now, in terms of how the index maintains its relevance to the mix of companies in the technology space, so we do recognize that there is a diverse mix of companies in the tech scene, and this will shine a spotlight on companies on different ends of the spectrums in terms of size and growth, and even uncertainty, ranging from your startups to your conglomerates. And these are typically two very different types of entities, each with their own focus and characteristics, and they thrive in different types of regimes. And so to ensure that our index selections remain relevant to the technology stream, we apply slightly different assessments on different aspects. So one example is if, depending on the entity type, for example, in assessing a conglomerate with multiple revenue streams, we tend to apply a more stringent threshold to their tech-related revenue to ensure that they are still major tech players despite the diverse range of revenue streams. Now, when we talk about uncertain times in terms of the resilience of exposure that the underlying stocks have that make up the index. So this index is going to give you exposure to companies domiciled in Southeast Asia, particularly in Singapore, India, Indonesia, Thailand, and Malaysia. But what is interesting is that with these companies are domiciled in this region, they have a diversified global revenue stream, which illustrates how deeply relevant and resilient the region is in the tech industry as it relates to the global ecosystem as well as the global customer base, as well as the enhanced growth opportunities from customer segments that they may not be as prevalent in their home markets.
Thank you for that, Andrea. So my next question is, what then are the regional tech benchmarks and how active investors can make use of this as part of their overall strategy?
Sure, thanks for that, Olivia. So when we compare the Southeast Asia Plus Tech Index performance against other regional tech benchmarks across Asia and US, we can see that the performance varies on different time horizons. Now, particularly as we look at a slightly longer time horizon of three years, we see that the Asia Tech Index gives a total annualized return of 29% compared to the US tech benchmark at 14%. Of course, very different landscapes. Now, if you want to compare within emerging Asia, we can look at a broad market benchmark. It performed at, it gave you a total return of 3% over 3 years as compared to, as we mentioned earlier, 29% for Asia Tech. So now what this simply means is that giving you access to the stocks via the index allows one to diversify your portfolio returns, as well as your exposure to the different regimes around the world, the economic regimes around the world.
So Andrea, just to wrap up our fireside chat, is there anything else you would like to add on before we proceed on to the application of how they can apply the insights they shared from your session?
Yes, thanks for that, Olivia. So I do think that in Southeast Asia, there are a few drivers of growth. Yes, there has been global slowdown in the tech sector, but the drivers of growth in Asia still stands. There's favorable macroeconomic outlook, resilience of the ecosystem. So why not be part of the growth in the Asia tech industry?
Okay, thank you so much to Raphael and Andrea. We will be back with you shortly as we now proceed on to how users can access this newly launched product and apply what they've learned, okay? We'll see you soon for the live Q&A. You've heard the analysis. Now, how can you apply what you learned? I would like to now invite Juncheong back into the room. Hi, Juncheong.
Hi, Olivia. Thank you. Do let me share my screen with you.
Sure. I mean, before you share your screen, let's look at the objective of your sharing session today, just for the people who are asking a lot of questions at the moment.
Sure. So the objective of the app sharing today will actually be showing all of our users and of course how they can subscribe to this IOP that will be launching really soon. And at the same time, we would also like to share more insights for our users to see all of the different features that we have on our app itself.
Perfect. So everyone out there, if you have your moomoo app on your desktop or your phone, have it ready right now and follow through with this live demo. The floor is yours, Juncheong.
Okay, thank you, Olivia. Let me share my screen right now. Okay, so for those who are using the app right now, you can see that from your watch list, if you're looking to subscribe to the new tech index ETF, there's two ways you can do it. First, you can go to Markets, click on SG, and then click on IPO. The second way you can do it is actually through Accounts, and then IPO, and then select Singapore. Of course, this will be the subscription time will start tomorrow on the 6th of June 2023 at 9 a.m. And more on the app demo, we'd like to show actually our users what you can do with our moomoo app. So for instance, if you will go to any counter that you like to see, you can click on News, and you'll be actually able to see all of the news related to the counter that you have chosen. You are also able to see all of the different announcements as well. Another feature I'd like to talk about is actually for instance, you can click on funds for this account itself. You can actually look at the asset breakdown, the sector that the fund is actually all about. And with this, you can also click on profile to look at what this fund is actually about, the underlying shares, the benchmark, as well as the issuer. And I'd just like to share more with our users, for our users who have not actually activated the Smart Save feature. Smart Save feature actually allows you to actually have your idle Singapore dollars or US dollars to earn potential returns while you wait for the best market opportunity. You can turn on your Smart Save feature by clicking on Funds, Cash Plus, and then Manage Smart Save. And lastly, we here at moomoo, we are an educational platform, and we want our users to always be constantly learning. If you're a new user and you are starting out, do definitely check out our Moo Learn page, where you can find it from Discover, Learn, and there are a lot of educational topics where you can find, including stocks, options, funds, as well as premium courses, practical trading strategy, and all about options trading as well. And with that, I'd like to end this short app demo, and then back to you, Olivia.
Thank you so much, Juncheong, and thank you to the audience for also participating and following through. Now, keep those questions coming as we head on to the most exciting part of the live webinar, which is the live Q&A. Now, may I invite our other guests back onto the floor, please? Welcome back, everyone. Okay, so we've got some questions lined up for everyone. We will try to keep it as engaging as possible. I'm just going to throw out the question to the floor. Anyone can just take it and add on accordingly. So the first question is for a new investor in this space. I would like to know how this instrument can actually help me because I don't really know how the Southeast Asian industry for tech is going to be like, especially how it's emerging. So could you just give us some key characteristics of why now?
Okay, so refer you to page 23 of the slides, so we can see actually the top 10 holdings. Some of these companies, for instance, investing as a new user yourself, new to investing, ETF serves as a great purpose, as a tool of diversification, if you will, as well as allowing you to gain exposure to certain markets that may not be that achievable by normal retail investor standards. So for instance, this ETF actually itself, it gives you a really diversified approach in the Southeast Asia market itself, and not following the traditional standard of having to list within Southeast Asia. You actually have companies that's listed abroad, such as the US, Indonesia, as well as Thailand and Singapore. So in this aspect, you'll be able to gain exposure to companies that is listed on different exchanges, but at the same time, you still get the Southeast Asia business exposure. For instance, you have first of all, you have your C Limited, you have your Grab holdings, and to those that on the who is viewing this, you are not certain. You still have some of these companies such as Infosys, which does IT consulting for all these Fortune 500 companies out there in the market. You have, for instance, Delta Electronics, also one of the largest electronic manufacturing company within Thailand itself. So these are some of the few companies that you'll be able to gain exposure through one single ETF. So especially in this context, I would say that most of us, if we were to go into single counter exposure, you yourself will be exposed to such volatility, and usually such drawdowns within these companies may not be palatable to retail investors. But nonetheless, we have constructed it into becoming an ETF format. It is, I wouldn't say that it's not volatile, it's lesser volatile to holding on to a single counter exposure.
Andrea, do you have anything to add to that?
Yes, definitely. So from an index provider's point of view, I should also highlight that the methodology in identifying the company, it's replicable, it's transparent, and it's rules-based. So what that means is that a company that makes it into the index only makes it in because it passes liquidity criteria, it passes revenue threshold criteria for it to be both relevant and tradable to the, to the team of the ETF.
Thank you for that. The next question is more on the app. So perhaps Juncheong, could you just tell us, you said that it's available tomorrow, is that right?
Yes, it will be available tomorrow at 9 a.m.
Okay, so for the people who are already active in this space, is there any other tool that they can use or leverage on for these uncertain times other than investing in this ETF?
For tools that they can use, of course, depends on each different traders and their risk level, depending on where they are actually in the market at. They can look into the different money market funds I was talking about for safety. And if they are diverse, they are not diversified enough. For instance, they're just in one market itself. Can actually look into the Singapore market if they are only invested in the US. So they can diversify their risk by doing so.
Thank you for that. Next question, Raphael, you mentioned some of the companies already inside of the ETF. Now, what are the list of full holdings? Because we got some questions on like what other companies or like the proportion of Southeast Asian companies are in the ETF.
So all in all, together, there's over 28 companies within this index itself, or rather this ETF itself. As of right now, we only have the top 10 holdings, but after launch, you can actually go to our website, CSOP.com, to find out the full holdings. We always publish it on a daily basis, the full holdings and then the weightage and the prices of the underlyings.
Okay. Andrea, do you have anything to add to that component? I mean, just coming from an index perspective.
Yeah, from an index perspective, from a broader perspective instead, when we look at the country weightage in the index, we see that Singapore domiciled companies, you have your C, your Grab, these take up 33% of the index, and then we go down the list with India at 23%, with Indonesia at 17%, Thailand at 16%, Malaysia at 11%. So this roughly gives you a view of the landscape of the technology sector in the Asia region. And one thing to note that because the focus is on Southeast Asia, we do implement an index rule where we restrict the weight of India domiciled companies to 50%. So that means that we simply stay true to the theme of the index, where we are shining a spotlight on Southeast Asia's growth in this sector.
And someone's got a question next. I mean, just on that growth topic, they're looking at, for example, Vietnam and Indonesia as part of their investment opportunities, but they are unsure because it's so uncertain at the moment. So is there, I know we touched on this during the presentation, but for an intermediate to advanced investor, is there, what are the, I guess, the risks and the opportunities with investing with this ETF?
Yeah, let me take that. I think on the risk perspective, on this front, sometimes you have to understand that there will still be some form of risk, be it geopolitical risk, even for government risk, based on really depend on the political scene of each country. It all has a certain form of risk involved, but particularly for tech companies, the main key risk is also interest rate risk. Like high interest rate environment will do harm to tech companies mainly because of the valuation portion. Secondarily, is also high interest rate environment also means that for such companies to raise capital, it will be a bit more expensive for them. And to raise debts, these debts will be costly in nature. Next up would be for such tech companies, to be honest, definitely there will be risk, and the risk involved is also to see whether these companies can they be profitable going forward in the future, as well as for instance, some of these companies have also rolled back on some of their promotions and all in a way to cut off all this ongoing promotions for its users, or to gain new users, for instance. So on this spectrum, it will also be hard to say whether will this kind of action cause lesser uptick rate, or will it be the other way around. So really itself, for tech companies, these are some of the key risks involved. So but nonetheless, what we see is a bit of a different story. What we see is really looking at how the current geopolitical scene has also allowed a new emerging group of middle class group within the region, as well as we also see that some of these companies moving on their supply chain downwards to Southeast Asia as well as India. You see that actually this creates more jobs, and you allow higher disposable incomes for the population as well. So in retrospect to that, with higher population, with growing disposable income, definitely it will give such tech companies, be it not just on the manufacturing end. If you look at the software end, these days, software techs, or rather soft techs these days, I've seen as more of a consumption play rather than a tech kind of play. So really, it boils down to perspectives. And what we're saying is possibly with this transfer of this relocation of this industrial change, industrial changes, we'll actually see growth within the region, and it will lead to a new wealth being created, and thus this will also give you the participation rate of this growth going forward.
Thank you for that. Andrea, do you have anything to add to Raphael's point?
Yeah, I totally agree that there are reasons for cautious optimism in growth in this region, but there are macroeconomic factors that has an impact globally. Now, this region, or rather this theme that we have at the moment, it really helps you to partly hedge against the uncertainties of the US-China relations, amongst many other reasons. So definitely, it's a region of growth. We should keep this in our spotlight while also executing a cautious optimism.
Thank you for that. Next question. You might have highlighted this, but I joined late. This is from a user, but thank you for joining. May I know the expense ratio for this ETF? Raphael?
If I'm not mistaken, the expense ratio is capped at 1.5%. The management fees for this ETF itself is at 99 basis points, or 0.99% per annum. So some of you may think that whether is it costly or not, but then I'll have to say that for such a case, it actually really depends, because of the various markets that are not liquid and not easy to enter. Definitely there will be some cost involved, but nonetheless, do keep a lookout on the bid-ask spread, because usually the management fees don't actually paint the full picture. You have to look closely, even for the ETF, especially for the ETF perspective, because the bid-ask spread itself will give the end user the net amount that how much you are paying for your position. If your bid-ask spread is wide, be it however low the management fees can get, you'll still be exposed to such a fluctuating prices or unfavorable prices if you buy or redeem.
Thank you for that. Next question is related to the app. So I guess Juncheong, you might want to take this. I mean, you mentioned before that you've dealt with a lot of clients. You're in a client-facing role anyway. So what are perhaps, I mean, based on other ETF launches as well? I mean, this one is a special and exclusive one. But what are some of the possible concerns and solutions regarding investing in this space?
Concerns, I would say for a lot of users when they are investing with us, depending on what kind of clients they are, because we have many different kind of clients, some of their concerns could be what if this ETF closes down, etc. Of course, it's not going to happen. Hopefully not happening. However, then there are other concerns for clients is their funds when they do deposit with us, and how the funds are kept separately. So I guess for client-wise, this would be usually most of their concerns regarding trades. Hopefully the question was answered.
I guess it's a reassuring point. The user wants to know that they are able to engage and continuously find solutions with your department, and or perhaps if they have any more questions related to this ETF once they can start trading tomorrow at 9 a.m. Do you have anything to add to that?
For the subscription, thing I would like to add is probably, from my understanding, the minimum subscription tomorrow will be at 1,000 Singapore dollars for those who are looking to subscribe to this tomorrow. So yeah, that would be, and then the ticker symbol will be SQQ when it does actually officially starts trading.
Mm-hmm. Thank you for that. So that brings me to my extended question. I'm just monitoring the questions that we're getting as well. So maybe Raphael, you talked about the risk before, right? And also the opportunities. So thank you for summarizing that. But perhaps you could also highlight that with this product, what are some of the ways you are, or steps that are in place to mitigate the risks involved?
As I've mentioned earlier on in the slides earlier, I think for this itself, it's more so to capture what is lacking in the market. On the global perspective, when you talk about your broader tech, you have your Nasdaq 100. And then when it comes to Chinese tech, you have your Hang Seng Tech. But however, within this region, we feel that there is always a product mismatch, or rather a missing piece of a puzzle within these segments, and hence we worked with IH to come up with the Southeast Asia Tech ETF out there for you guys to complement into your whole portfolio, so that your investment wise you'll be fully aligned with the current market trends, as well as to gain exposure in this region which was not available previously. So what we are saying also is that the Southeast Asian regions, why we actually prefer them is also because of their nature. Why do I say that? Being smaller in nature itself, Southeast Asia countries tends to be more reliant and interdependent on one another for trades and all, which is why we also like this theme. I mean that if you're talking about Southeast Asia region, you travel around, if you were to use some of your apps, it is really seamless. The adoption rate, I think the way we live, the way we relate to things, it's pretty much, I would say, culturally a bit similar in certain manner. And with this in mind, definitely it gives us an edge in this tech segment, because if you were to use some of the apps, for instance, the China side of things or the Asia side of things, definitely you have your Tencent, your WeChat, but this is not something that's widely adopted. But however, you look at the Southeast Asia side of things, when you have, for instance, you have Shopee, you have Grab and all. These are some of the few apps that actually, where you move across border, there is not much tweaking required, and it fits the relevant markets as well. So this is why we also like some of these themes out there in the market today. Yep, pretty much from my end.
Thanks, Raphael, for that. If I might add on, you shared a lot on the macroeconomic risks in terms of going to this product. Now, from an individual investor's point of view, when you are trying to identify a basket of stocks that's relevant to the theme, you're going to face a couple of risks in the form of liquidity risk, size risk, and relevance to the theme, as well as risks that arise from regulations such as your foreign ownership limits that exist in certain markets in Asia. And on top of that, you then have to make sure that you rebalance your portfolio on a on a 6-month basis or 1-year basis, just to ensure that companies that you selected at the start of your timeline is still relevant after a few months has passed. So in constructing that basket of stocks, there are a number of risks that you're going to run into. Now, where we come in as an index provider, as well as an ETF issuer, we come up with that systematic basket of stocks for you to address investor or individual traders related risk.
I think that's a great point to end off with, especially how that also answers the next question. So thank you, Andrea, for adding on to Raphael's point. Yeah, so thank you to the audience for participating. We picked out the most relevant questions to today's topic, which is taking on to the sea of opportunities. We were talking about the macro micro trends out there, but also how this product can be a part of your strategy going forward during these uncertain market times. So with that, as always, in every show, to my guests today, what is that final takeaway that you have for our audience today, Raphael?
Like I mentioned earlier, don't put all your eggs in one basket. If the business are not doing so, you shouldn't too. And with an ETF, such diversified ETF, definitely you gain exposure within the market, as well as if you are already using some of these services out there in the market, why not invest in them, right?
Absolutely. Thank you for that. And Andrea, what about yourself?
Yes, this is a tool for you to be part of the growth in Asia's largest technology companies. That's all from me.
And of course, last but not least, Juncheong, let's end off with you on a final takeaway for our audience.
I think both Raphael and Andrea has talked a lot about the ETF that's coming up. Just pleased to let our users know that there's a subscription promotion going on when you do subscribe to this fund. So do look out for it tomorrow. Right now, I can tell you those who subscribe within 3,000 to 9,999 will get a cashback reward of $28.88 Singapore dollars. And then those from 10,000 to below 50,000 will be having a cashback reward of $68.88 Singapore dollars. And those who do subscribe more than 50,000 will get a cashback reward of 200 Singapore dollars.
Okay, thank you for highlighting that. I will share a QR code at the end for anyone who's interested in that. So thank you so much for rounding up this discussion. And that was Raphael, Andrea, and Juncheong tuning in with us live from our moomoo Singapore office. I'll see you for our next show together, everyone. Okay, to the audience, if you have any more questions, remember that we're still here for you. You can drop us an email over here. We've got 2 emails for you. So whether or not it's a product related question or for our marketing teams for potential collaborations or inquiries, do email us here and our teams will get back to you as soon as they can. And we always have upcoming content and shows for you daily. So really check out the content that we craft and create just for you, because we're here to guide you and elevate your educational journey in your own personal finance side of things. So it's really important that you go back and even watch the replay of this to see, whatever you missed or other live webinar shows, just so that you can increase that palette of education for yourself. So scan the QR code right here, because we are the bridge to experts like Raphael, Andrea, or Juncheong today. So if you want to watch the replay, I know I had a question on that. You can scan the QR code right here and you can gain access to all these tools just for yourself. So you follow our socials, but then you've got the QR code next right now on what Juncheong mentioned at the end. So if you're interested in this, do check it out right here, and you can sign up right here as well. As always, it was a pleasure having you with us. We'll see you next time for our next show. Hope you have a great week. And once again, you're with me, Olivia Higgins.